Friday, September 13th, 4:07 p.m. New York time. Good afternoon. Welcome to Winning Wall Street's Money. Go over the day trade I took on the S&P 500 futures pre-market. What does all that mean? It means I traded derivatives using the futures, and I did it before the New York stock market opened. New York stock market opens at 9:30. I did my trade before that. Yep, futures. They are one of many financial exchanges besides just the stock exchange. Looking here at my desktop trading platform, Thinkorswim, now owned by Charles Schwab. 3 grids, top left, 15-minute, bottom 5-minute, and the right 1 minute. This is the view I had coming into my trigger to take the trade. Looking here on the 15-minute chart, top left, here's the Asian period, London, and pre-New York. So my trade occurred in that green candle right here during that. Take it on the 5 minutes. Zoom in some more. So here again, the high of the London session, the low of the London session. We were inside the London session range when I took the trade. Blue vertical line. This is the 8 o'clock hour. And these gray vertical lines are the half an hour. So that'd be 8:30. Zoom in some more. 7 a.m., 8 a.m. Below that horizontal line. 7 a.m. low. During the 8:30 period, this gray vertical line, we tested and broke below the 7 a.m. low. Look at that bullish pin bar. Outstanding. Wow. Bunch of people that might have been short got wiped out. And then huge bullish wick. I was thinking maybe we'll go test midpoint of this red candle. And maybe I'll look to trade a bearish there. So in hindsight, I should have just traded bullish as soon as we broke above that green candle right there. Yeah, I didn't. Because I was bearish because this huge impulse moved down. The market reversed. Oh, good. I didn't take that short over here. And then it passed. And then I looked for bullish entry. So again, I missed that opportunity going bullish after this broke, but I wasn't bullish at that time. I was bearish. Looking here. Let's take it to the 1 minute. Zoom in some more. So on the 1 minute. So we had this reversal to occur down here, which was below, happened to be below that 7 a.m. low. And this was an interesting area right here. So I broke above it. I was thinking, okay, we broke above it. Got some consolidation over here, a little whipsaw, sitting on my hands, waiting. And I see this pullback on weakness, little consolidation. Took the long on this breakout here, thinking maybe we'll go back to the top of the top of the 8 o'clock hour, go forward a little bit. But then this green candle, bearish pin bar formed here, and I was, shoot. Because I was up, had some nice gains. Can't close it. Because again, I was, okay, greedy maybe. I was looking for it to go higher. So had a lot of gains here. I should have just closed it. I'm scalping. What was I thinking? Shame on me. I should have just taken those gains. So I was hoping the next candle will do some kind of retracement back up here so I can still get a fair profit. Inside candle form, I was like, oh, yeah, that's suspicious. Let me close the trade. So I closed the trade. So half of my gains I did not make. I mean, the full gains I didn't make, only made half. Still, it was a winning trade. It was a winning trade still, yeah. But in hindsight, let me go back here too and label this. It's already labeled. Top of that candle. So that bullish pin bar on that break is where I should have gone long. Let's go look at it on the 1 minute, see how it looked. Yep, right there. So that green candle here broke it. I would have gone long. May not got filled immediately right there. It might have got filled. So during the minor retracement or something like that. But that's the entry I should have been in. If I took that entry there, my gains would have been a lot of much better, sweeter. Yep. Let's go forward to see what happened after I closed the trade right there. And in hindsight, that's how I close it. 854. So again, it was before the New York Stock Exchange opened. These are 1 minute charts, 1 minute candles. And again, I told you originally I was looking for it to go somewhere up over there. See how it goes. Yeah. It did go higher as I expected. Remember this bearish pin bar expecting to be retest? And look at that. It went close. It didn't test it, swing high, but went up there. So my original thought process was correct where I was expecting to go, but good money management. I closed it and still had profits. And then look at that huge sell-off. Oh, thank goodness. Let's see what happened. Again, that was coming to the 9 o'clock hour. That blue vertical line, 9 o'clock hour. So it looks. Let's remove this too. Don't need that anymore. And there was another trade I missed too. So remember the low right here? I think it might be better on the 5 minutes. We're looking at the 5 minute. Yeah, right here, this bullish pin bar. This is at 840. And coming into the New York session here, but I'll show you in the 1 minute. I didn't take any trades. That was my only trade. There was another trade I watched and I didn't take it, disappointing. So I had this huge dump, the New York session. Again, swing high, swing low. Looking for the trade opportunity down there. And that came right there at the 9:30 open. Bunch of buyers down here. And I was thinking, no, I'm not going to take any trades between 9:30 and 10 because there was economic news at 10, I believe. So let me remove this blue one, see what happened. Look at that. Nice, took off like a rocket ship. So that was a sweet trade I missed. Again, double bottom. Yep, I could have taken the trade. Could have, should have, would have. But the point is, I should have taken it because even with money management, I had my stop order below that. Should have just taken it. Sure, I'm risking money, but if I interpret it right, the odds are more in my favor because the location, versus getting in the middle when it's downturn. No, it's down better bit down there. Yeah, that would be nice. Nice run. And then coming here, watch. Remember, 10 a.m. is the news, so get approaching it. Took off like a rocket ship. So we again, during the New York session, the first half an hour, 9:30, 10, we took out the overnight high right here. Meanwhile, I'm watching all these breakthrough and again, this consolidation here. Could have done the trade there. I didn't. Often I feel uncomfortable not to take trades between the 9:30 and 10. Because the market is just so much whipsaw. And just seconds, you could be huge move down against you. Vice versa, it'll show. That's why I like some of these calmer time periods. And there was light news today. There was nothing other than that's what you're about to see. About to see. There it is. Orange line on the right. That was the economic news for the United States today. And I didn't want to be the trade during that. Huge whipsaw. Look at that. All the way down here, tested this 4-hour low. And all the way up here, tested this big round number. Quarters, 56.25. You're going to see that in a minute. Let me fade this out. There. Fade the orange line out. There we go. Look at that whipsaw on that red candle. All the way down there, down there. Thank goodness I was not in the trade. So let's look at it on the 5-minute. Which it ended up turning green on the 5-minute candle, but huge wick on the bottom, on top, huge trading range. So much whipsaw. Again, this was the sweet spot here. And the retest down there. So many places now in hindsight, look, could have taken the trade, could have taken the trade. Yeah. Less trades, lower risk. And just one trade for the day, small gain. Okay. That's how it worked out. That's it for the video. Thank you for taking the time watching.